Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so here, this is pre-market prep for January 28th. And so, yeah, I missed yesterday because I was flying. And so, yeah, wanted to go over some charts here before I go to work tomorrow and Thursday. I will be doing this live. So they should be a little bit longer and a little bit more dynamic. But anyways, here getting into the chart, we did see this pretty nasty gap down with the S&P 500, ticker symbol SPX, closing yesterday on Monday the 27th at $6,012.28, being down overall about 1.5% on the day, but it did close green in the sense that we opened down here and closed up here. But we did leave this pretty nasty gap here, a little island up here at all-time highs. But yeah, so I just kind of wanted to go over that, dissect it a little bit before we look over at the SPY and look at some pre-market price action. And so what we can see here is that, I did have this level drawn here at right around $6,100. We did wick up to it on what looks like Wednesday of last week on the 22nd, got rejected, but then on Thursday closed above, so looking pretty good there. But before getting into the weekend Friday, we did close red, pulling back, and it looks like, actually closing just above that line there, but it didn't necessarily have the best look before going into the weekend. Of course, though, being above that level, I kind of viewed it as a little risky and not knowing which way it could be going, but then we did see this gap down, a little bit of weakness, and of course that is on the news of DeepSeek, which is the Chinese AI, which is an LLM, I believe, language learning model. So similar to ChatGPT, what we have on our phones, just to use as a little AI assistant. And so DeepSeek is way cheaper, way more efficient than, OpenAI and all the others. But I kind of view that as, OpenAI is focusing more on AGI, which is artificial general intelligence. So it's a little bit more advanced. And so I kind of view that this, what we're seeing in the markets right now is a little bit of panic, and we're going to be seeing this as a dip buying opportunity. But how long is that dip going to last? It might be multiple days, multiple weeks. Maybe we'll see a bottom in February, if not the end of January. So good to, not be chasing a falling knife. But since we did see this bounce yesterday coming up here, let's see, from the low going up about 0.7% or so from the open to the close yesterday, and also coming to this level that I have marked here at, $5,963.61. It did bounce from that, as well as this red line here, which was effectively kind of the intersection of that line. But I might just delete that because I don't think it's as important right now. And actually, I should probably redraw this. I'm not going to do it right now because I got heading to work, but I should probably redraw this orange line to be the close here. And actually, maybe I'll just do that. Might as well. Actually, I won't do it now because maybe, we start to evaluate how the price is trading around that today. So I'll revisit tomorrow morning. But I could see the SPX coming down to this yellow downtrend here that I have from the prior all-time highs. And so I think that actually seems like a very nice dip buying level. And I can do a quick little Fibonacci retracement here to see where price could be settling at and finding some support. And so I believe I just have the 786 on there, but let's put the 50% up there. Yeah, right around the intersection of that downtrend, just a little bit above it. Let's throw the 618. That would be around $5,900. So, could be coming down another $100 or so before finding support. So again, I think it's good to not be so aggressively chasing a falling knife if that is what we're going to be seeing. But since we did see it green on the day, and we do have this gap up here, a little island up here, we might be refilling that little zone there above the stashed line around $6,050. But yeah, I mean, I could see this coming down over the next week, but that being a nice dip buying opportunity. And so now let's flip over to the SPY, or the SPY, and this is another S&P tracking ETF. And so this one closed yesterday at $599.37, again being down about 1.5% on the day, but it does look like it is going up about 0.5% in the pre-market, now above $600. So I'll look at that in just a second, but did just kind of want to look at this relative to how we drew or how we were looking at the SPX. And so again, there got the 50% level at $593 and the 618 around $589, give or take. And so we'll see if we do come down to those levels. But now if I do switch over to the 10-minute time frame, we can see that, following the close yesterday during the after hours, the price did hold. It did pull back a little bit, but more or less more or less flat in the after hours trading session. But then during pre-market, gapped up and potentially heading towards getting to that 603 level, which was, let's see, a prior gap that was formed. Let's see, just got to zoom in again on the upside. Then we did leave this island up here. So we do have this other gap to fill, and that would be going to the low that was hit on the 24th, so Friday of last week. It looks like the low was 606.80. So let's see if I can get that. Or sorry, the close is what I want, 607.97. So I can just draw that there, make that a dashed thicker blue line so we know it is a gap that has yet to be filled. So we kind of got this range here that price might be getting back to, maybe getting rejected there. But yeah, like over the course of maybe the next week, I feel like this could be heading down to 590 or so, right around there. But anyway, since I'm limited on time, I am going to switch over to the VIX. Got a very nice spike and actually now trading above this light blue uptrend that I had drawn. And so we closed yesterday on the 27th at a price of $17.90, being up a whopping 20.5% on the day, or about $3. So looking really good there. And this, actually for the UVIX, which I trade personally, I will go over that in a second. I was looking for it to get a little bit higher, and that didn't happen. And so I do feel like, we could be seeing some more of a cool off before we do see another volatility spike. And so with that being said, I do think that we could be coming back to around, this uptrend, testing that, so that could be coming down to, let's see, as low as, $17 or so. But we now do have this gap to be keeping an eye on. And so the close on Friday last week was at, let's see, 1485. So I do have that marked correctly there. Just again, going to do it a thicker dashed blue line, so we know there is a gap down there. Also got this pretty big wick to the upside, so that makes me think that, we kind of got rejected there. And then just like I drew this uptrend here, I'm going to do something very similar, but going from the close here on December 18th, intersecting with the open from January 13th. And so now we have, kind of this little wedge pattern that we did break out of. And so, I think that looks pretty nice, pretty encouraging that we are potentially at support here and that this could be bouncing higher. But it could also be cooling off over the next couple of weeks, which is kind of what I like to track with the UVIX. And so, perhaps this move is over. And, this is following, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles approximately. So about 2 weeks, maybe I want to adjust this to end on the 24th, the red box there, to signify that this down period is over and that we're now in a green period. And so I might actually do that. And so I'm just going to, let's see, move this over there and make sure that the low is 27 even, which was the low over there. And then 42.30 was the high over here on the 13th. So just going to lock that in place. And so I should note that the UVIX yesterday on the 27th closed at a price of $30.94, being up almost 13% on the day. And now it looks like in the pre-market, pulling back about 2.5%. And so what I was looking at, and I actually exchanged with somebody in the comments thinking that price could be getting up to around $40, where we do have this blue line here, which was a prior gap that was filled, just over here. On the 30th, we closed lower and then started to move higher. And also that does converge with this purple downtrend that I have here. So, I think that this could be heading up to 40, but perhaps it takes another couple weeks or maybe, another month for one of these a green cycle and then maybe a red cycle to follow. But actually, I do think that just like over here, we saw, kind of a move up and then a pullback and then a continuation higher. So I think we could actually see a little bit of a cool off, maybe trading around $30 a share before we continue up to 40. So for me personally, I was not super aggressive at 27. I actually waited for it to hit 27 before placing a limit buy. And then we just, wicked down to 27. That was the low, believe it or not. And, so my order did not get filled, but I was accumulating below 30. So I am up a little bit on my position. I could have taken profits during the pre-market yesterday, but, I was traveling, and so I didn't want to be, on the chart too much, so I just placed a limit at what I believe would be a 40% gain for me. I don't have a huge position, but I was just waiting for that. And with it being not such a huge position, I'm not too emotional about it or anything, not going crazy about not taking profits. But if we do look at the 10-minute time frame, we can see that from yesterday, the high actually during the pre-market went up to around $37.26. So that would have been a very, very nice swing to take profits up there. But, like I said, I just placed a limit sell, did not get filled. And so if it does come back down to 27, I will be alerted. Hopefully we get more than just, a very brief test of it here. And actually if I would have had a limit buy at 27, it may not have even gotten filled. So, I think that is pretty cool, but we do now see some consolidation around 30, so hopefully that does start to act as support before we continue higher. And just like I did with the VIX, I'm going to put a little, gap marker here. So the close from Friday the 24th was 27.42. I do have that marked correctly, so just going to lock it in place. Make that a dashed thick blue line. So we know there is a gap there that might be getting filled. But, I kind of view this as we were in this downtrending period. We now got this launch, kind of a breakout. So it's kind of this regime shift back into this green period where over the next 2 weeks, I do think this could be heading up to around $40 a share. So I am looking forward to that. But yeah, right around now, $30 does seem to be acting as support. And then, of course, I will flip over to Bitcoin now. This one, it's been kind of an exciting, price action getting into Sunday and Monday, as we were below $100,000. So it looks like the low for the 27th, so on Monday, the low was $97,700 and about $16, give or take. This is the data from Webull, so not as good as TradingView. I just don't have the time to jump over there here in the pre-market. But yeah, what you can see is that, I do have this Fibonacci retracement here. Maybe I want to make this a little bit thicker, make that light blue so we can see it a little clearer. We did wick to below the 50% level, which is around $99,300. Did not quite get to around $97,000 at the 618. But, and that level would also coincide with retesting that yellow downtrend, going back to this prior high here from December 17th. We did go a little bit higher than that, following Trump's inauguration. So, I do think that we will be seeing some higher moves, because what we do have here is this effectively, whether you want to think of this bigger picture as a bull flag, or this is kind of a falling wedge pattern, or just this descending level of resistance that we've now broken above and effectively testing it as support here. I I do think that we will be seeing this going higher. And I suspect later in 2025, we will be seeing price around $200,000, but maybe it only gets to 150. Who knows? But yeah, I mean, I am bullish for Bitcoin, and that's really why I tend to lean more bullish towards the S&P 500, the stock market in general, because I feel like we are in this Bitcoin bull cycle. The year following the halving, we tend to go a lot higher. With alt season, lots of money to be made in the crypto sector. So yeah, I am just really excited about Bitcoin. And kind of related to AI that I was talking about earlier, I did want to go over the URA. This is a uranium ETF. And so, yeah, I did want to go over this, especially because yesterday we did, it looks like gap down pretty massively, around 11% closing at 27.10. And I am actually just going to clear all of my drawings that I have up here just because I want to give some fresh analysis on this. But with, needing to power data centers for AI and, whatnot, and training data centers, whatever, I think that uranium and nuclear power could be really great, moving, a lot higher. And also, like I said, great for the country, the U.S., because we need to be building up more nuclear infrastructure. And so, yeah, I mean, I just think that this could be really, really nice. And let's see, although this was talked about in Colin Gladman's video that he put out yesterday, I probably won't be able to get a link in the description, but I'd recommend checking that out. Maybe I'll post it to the community page of the channel. But he talked about when you do see a gap down, if you do see that candle being red, so a continuing to sell, that you're likely going to see a continuation down. And so what might happen is maybe, we do get a little bit of a bounce, but generally because that candle is red there, it's probably going to fade. That's going to be a dead cat bounce, and it will continue lower. So that's what I would be looking for with this, which really is just going to be, kind of dip buying opportunity territory. And so, what I might do here, just because I don't want to get too into this, let's just draw a Fibonacci retracement here from the low of 2660 up to the high of 3160 over here, which, yeah, that's right. And so I am just going to add back the 786. We did break below that, so I could see this coming down for a full retracement, which would be to around $27 or so. Actually, we're already there. Yeah, I mean, let's see. So what I could be drawing with this is just a parallel, not really too exciting, but going to the high from October 21st and then connecting with like the open. Let's see if I can get the open price here. Here, I gotta draw this a little bit. Here, it's a little bit wonky. So I'm doing from the open price on the 21st of October to the open price from November 22nd, and then coming down to, let's see, the low from October 10th. This is just going to be approximate. Did, break below it here. So, it does look like it could be going lower still. Like I said, I think that we could be getting a bounce and then maybe a break lower. So do be cautious with it. But where could this be going? I did the Fibonacci here. That didn't really seem to be that useful. I could do another one here from the low hit on August 5th. That was a very important day in the market. And that low for URA was 22.18. Bringing that up to the high here of 33.09. Just going to make sure that's correct. Lock that in place. And actually make that a little bit thicker and light blue. I do like that shading. And so, yeah, I mean, we did come down to the 50% retracement around 27.64, which we're currently trading around in the pre-market. But I could see this rolling over down to the 618 around $26, or maybe even getting down to the 786 around $24.50. So I would look for that. And I'm actually just going to make this little arrow drawing a little bit thicker, and I'm going to make that purple just so we keep an eye on it and we can revisit this. This is one I would like to be following during pre-market prep because I do think it is aligned well with the AI sector and also just the US building up its nuclear infrastructure. And then one other ticker I wanted to go over really quickly before I do head to work is Wolfspeed, ticker symbol WOLF, so Wolf. Came down almost 10% yesterday, closing at a price of 605. And this is something that Gareth Soloway actually goes over quite frequently because of this long-term downtrending level of resistance. And yeah, I believe that this line here is from a Fibonacci retracement. And yeah, so I feel like there's a lot of potential upside for this. It does look like it's starting to break out from that downtrend, but kind of retesting it. And so I do think that this one will be a very nice one to be trading for options. So I might be adding it to the weekly options video, but did just want to throw it up here, put it on our radar. And yeah, I mean, with the price trading around $6, I could see this heading up to potentially, around $20 or so. The highs over here, going back to October, were right around 17, 18 bucks. And we do have the 1618 here. It's a Fibonacci extension, as you can see highlighted over here. The 1618 is around 21 bucks. And so, yeah, I might want to swing this for some calls, but I would probably do that for a conservative 20% because I've been holding those options a little too long is what I've been finding. But yeah, anyways, this one just looks too good to pass up. So I will probably add it to the list for Saturday, so make sure you check that out. But anyways, I got to get headed to work, so I just wanted to, as always, share my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Take care and have a great Tuesday, guys. Cheers.